Hey everybody, welcome back to Drawbridge Finance. Today we're talking about the two major factors that I look at when purchasing a foreign stock. As always, welcome back to the channel. My name is Levi Woods. This is Drawbridge Finance. I'm not a professional investor. I don't work in the financial industry, and this is an opinion channel about money. Today, I want to chat about dividend stocks and growth stocks both, and I want to talk about whether or not I should be buying foreign stocks, because there's two major factors that I look at when purchasing a foreign stock, and they both really revolve around exchange rates. And the first one is the cost of buying. I'll give you guys an example because last week I was traveling and we were seeing like quite a big rise in the market, and I knew that it was uptrending. And so I thought that I would put on a little swing trade. So I decided to put on a trade on SPXL, and I did this in my Wealthsimple account. And my patrons all know about this because they can follow my trades. If you guys are interested in following my trades, click down in the description below. You'll see a link to my Patreon account. You guys can sign up. You can watch all of my trades. But anyways, the swing trade that I was looking at was around a 1% gain is what we're looking at in a single day. So this is a pretty aggressive little trade. And I was using a triple leveraged bull ETF. So it sounds more complicated than it is, but it allows us, when there is a strong trend, to make a significant gain or loss. You know, there's always risks in any sort of trading, but we can make a gain or loss in a pretty short-term manner using a leveraged ETF. And so I put on a trade in SPXL, and I'll show you. You can see the follow-up post. It sold the SPXL shares. So I bought those triple leverage shares yesterday at $54.02 and sold today for $54.68. That's a 1.2% increase in a single day. Now, the thing about this trade, which really sucked for me, is I'm a Canadian, and this was an American transaction, and I was using my Wealthsimple trade account, which is pretty new to me. There's not a lot of trades that are actually available in it, so it hasn't been working very well for me. And in this particular case, what I did was I bought the shares for $54.02, and then I sold them for $54.68. And what I wasn't taking into account, because this was one of the first times I'd used Wealthsimple Trade to actually do this type of transaction, was the fees that were going to be charged for the currency conversion. So I basically had to take my Canadian dollars that were sitting in my account, convert them to American dollars to make the purchase in SPXL, and then when I sold it, it automatically transferred it back into Canadian dollars. Now, to make a long story short, I was making a $200 trade or something. It was relatively small, and the currency conversion actually cost me more than 1%, which was what my gain was. So even though the trade made money, I bought at $54.02 and sold at $54.68, making that little gain. I actually had less money in my account because of the currency rate exchange fee. I was a little bit caught off guard, one, because I don't usually do that. In most of my accounts, I keep US dollars and I just trade in US dollars and then back to US dollars. So I wasn't very accustomed to that, and I won't make that mistake again. So that's one factor that I have to take into consideration when I'm looking at purchasing a foreign stock. Now, the second thing that I look at is the long-term outlook of the currency rate. Now, basically what I'm talking about here is I want to know if I feel like the American dollar is going to continue to go up or the Canadian dollar is going to start to go up, then I can make a choice as to whether or not I want to invest in American stocks or Canadian stocks. And now sometimes I have the choice to buy in either the Canadian market or the American market. And I'm going to show you an example. I'm going to head over to Yahoo Finance and we're going to pull up a stock. So I'm just going to pull this up. Bam. Now, this is a question from DJ who asked me about this particular stock. So I don't own this. I'm not recommending it. I'm just going to look at it for the example of this video. So you can see right here, we've got BAM, Brookfield Asset Management, and it trades on the New York Stock Exchange. Right below it, we also have this BAM-A.TO, which is the Brookfield Asset Management. Exactly the same company. Exactly the same. One trades in Toronto in Canadian dollars, one trades in the New York Stock Exchange. So let's take a look at these. Let's pull up the information here. Brookfield Asset Management, BAM. Right here, New York Stock Exchange. So this is American dollars, 49.02. And then we can look at this dividend, 64 cents, which is 1.3%. So let's take a look at BAM-A on the Toronto Stock Exchange. So now, same chart, Brookfield Asset Management, same company, but this is on the Toronto Stock Exchange, $64.80. And the forward dividend yield is 84 cents. Now, these look like totally different prices. So I built a little chart because that's what I like to do on this channel is build charts, you guys all know. So I'm doing a quick little conversion, US dollar to Canadian stock purchase. So the amount to invest, in my case, I'm Canadian, but this could work either way. We're just doing a currency conversion from one to another. So in this case, we're looking at if I had $10,000 and I wanted to buy stock, how many stocks could I buy with the money? So we look at this. We've got this top one, the stocks. We've got BAM, New York Stock Exchange. Here's the price, US dollars 49.02. BAM-A. The Canadian price 64.80. We got that information right off Yahoo. We just plugged it in. Here's the expected annual dividend per share, 64 cents and 84 cents. At a glance, the one in the Canadian one looks way more expensive. But when we do the exchange rate, so today's exchange rate is 1.32203. Now we got that off of xe.com. If you guys are interested, where am I going to get my exchange rates? We just go here, live exchange rates, Canadian to US dollar, and we can just click the inverse and we can see the US dollar to Canadian dollar. So let's just plug this back into this little chart. So we've got the exchange rate 1.32203 and I've entered that. And so how many stocks can I purchase? Well, no shock here. They're the exact same company. They have the same valuation. It's based on exchange rate. So if I took $10,000 Canadian, converted to American dollars and bought as many stocks as I could purchase 154 shares on the New York Exchange. I could also purchase 154 shares on the Toronto Stock Exchange. Means that my expected annual dividend, when converted back to Canadian dollars, is $130.30 and $129.36. Very, very nominal difference. And now not nearly as big a difference as we're going to see from exchange rate differences. So this is where that factor starts to come in. It's like in this type of stock where I have the choice to buy it on the Canadian or the American, when I choose to buy it on the American, I'm making an assumption that the American dollar is going to increase in value faster than the Canadian dollar. And that would be why I would be purchasing it on the American exchange. Otherwise, if I didn't have any outlook on the exchange rate at all, I would just buy it in Canadian dollars. I don't have to pay the exchange fee right off the top, and I get the same dividend yield. I get to buy the same amount of stocks. So as a Canadian, it's smarter for me to buy Canadian stocks unless I have an outlook that is specific to the difference of the exchange rate going forward, which I currently do not. I don't think the American dollar is going to go up and up and up compared to the Canadian dollar because the Canadian dollar already has a really low valuation already. Now let's just look at one other example because this is another Brookfield product. So BEP, Brookfield Renewable Partners, and you can see it's on the New York Stock Exchange as BEP or BEP-UN, Brookfield Renewables, and we can look at those. And if we look at the max chart, another aggressive growth stock, but pays a way higher dividend. The forward dividend is $2.06 on the New York Stock Exchange on a $36 stock. So let's go back to this little chart and we'll take a look at that. So $36 for the American one. The Canadian equivalent would be $47.67. The dividend on the US dollar one would be $2.06 American compared to the Canadian, which would be $2.71. The number of shares I'd be able to buy with $10,000 would be 210, and the expected dividend is $5.71 or $5.69. Now, I don't know about you guys, but when I'm looking at growth stocks, you could see why I would probably choose the BEP over the BAM because they both are growing, which is great. That's what we want them to do. But the one just has a way higher dividend yield, paying like 5.5% dividend yield on a $10,000 investment. My expected dividend yield, $130 compared to $500. Now, I'm going to take this one step further because really the question from DJ was about whether or not he should be buying BAM in his TFSA or his RSP. And I just want to show another chart that I built really, really quickly. And this is basically just like the yield amount of what we expect from the dividend. And I'm using a really large number here, $100,000 account, just to show the graphicness of the difference that can happen. So if we look at a stock that pays 1% dividend and we have $100,000 invested, then the monthly dividend income is going to be $83 if we were in our own country, if we're not investing in a foreign country. Now, I've done videos on this before. I'll put a link at the end talking about the pros and cons of different accounts and whether or not you would want to look at what type of account to make what investment in. Now, in this case, we have a choice. Because it pays a dividend, we can either put it in an account where we get the full dividend, or we can put it in an account where we get the dividend minus a 15% withholding tax. So I want to show you how much that withholding tax makes a difference, because it might surprise you. So if we collect the whole dividend, if it's in the type of account where we get the whole dividend paid out, $83 a month, at the end of the year, our $100,000 is worth $101,004. If we're in an account that has the 15% withholding tax, it's worth $100,853. The end of year value is 99.85%. There's barely any difference compared to the account that didn't have the withholding tax taken off. 99.85%. It made no difference whatsoever. That's because this dividend yield is so low. If we look at these higher dividend yields, the greater the dividend yield, the greater impact it has. If we look down here at an 11% stock, maybe that's a little bit too aggressive, a 10% dividend stock, it's 98%. This value in the account that has the withholding tax taken off is 98.5% of the value that I would have gotten had I had it in a tax deferred account, such as an RSP for Canadians. So if I'm looking at high yield stocks, it might be smarter for me to put it into my RSP and not my TFSA. But if I'm looking at like stocks like BAM that have a 1.5% yield, it really doesn't matter. I'm still making 99.85% of my money. I mean, and that's on $100,000. That's a huge difference. So I wouldn't worry about it so much if I was purchasing BAM. It's like whatever account I had money in, if I wanted to buy that in my RSP or my TFSA, it wouldn't matter because the dividend yield is low. As the dividend yield increases, I want to make sure that I'm putting that into my RSP, not into my TFSA. Well, I hope you guys enjoyed this video today. I know I always learn something new when I make a chart like this. I love making these charts. And if you guys are interested in downloading some of my charts, you can either check out my Etsy store or you can check out my Patreon account if you want to support the channel, follow all of my trades so we can all get rich together.